Thank you for joining us at XM.com. You're watching today's market comment by Rafi Boyajian. I'm Cristina Marujos. Global equity markets started Friday on a somewhat more optimistic tone after coming under heavy selling pressure this week from a spike in bond yields, even as major central banks signaled doubts about the need for additional rate hikes. The jump in yields came after the U.S. Treasury Department said on Wednesday it will ramp up the size of its quarterly bond sales. The yields on 10 and 30-year Treasury notes have shot up this week to near 9-month highs, putting a lid on Wall Street gains as equity traders now have a new threat to grapple with, just as the Fed potentially stays on pause for the rest of the year. For the moment, however, the sell-off in bonds is taking a breather, with Treasury yields holding steady around yesterday's highs. Upbeat earnings results from Amazon.com overnight have brought some relief, lifting Wall Street futures after all the major indices closed in the red on Thursday. In Asia and Europe, stocks were lifted from further pledges by Chinese policymakers to support firms in the private sector. Although most investors have stopped holding out for a full-scale stimulus from Beijing, this drip feed of targeted measures seems to be broadening, and China-related assets are taking note, and the Australian dollar is attempting a rebound today on the back of it. There was a further boost for the Aussie today from the Reserve Bank of Australia's latest quarterly monetary policy statement, which projected that inflation may not fall to the 2 to 3% target band until the end of 2025. Another currency struggling to find its feet is the British pound, as investors were disappointed that the Bank of England didn't strike a more hawkish tone when it raised its key rate by the expected 25 basis points on Thursday. The pound tumbled yesterday after Governor Andrew Bailey told reporters he didn't think there was a case for a 50 basis points hike. The US dollar, meanwhile, was flat against a basket of currencies. The July ISM PMIs were a mixed bag as far as the US economic outlook is concerned, and given the rate cut pricing for 2024 on the one hand and elevated Treasury yields on the other, the risks for the greenback heading into the non-farm payrolls report are symmetrical. This was today's market comment at XM.com. Have a great weekend.